Hello guys, so I'm gonna tell you one easy way or easy website that you can use to calculate options profit, right? Sometimes people get confused about if I buy a contract, how much it's gonna go if I sell it tomorrow or day after, right? So this website is gonna make their calculation easy. It's gonna give you a visualization on where the contract will be if you sell, if you try to close that contract in future till expiry, right? So it's gonna give you the complete chart and make your life easy to calculate your profit. So without any further ado, let's start. I'm in my computer screen, right? And this is the site that you should be making use of if you are in options trading, okay? And that's options profit calculator. Maybe if you're already using it, then very good. This is a good strategy to check your contracts before you get into any trades, right? It's always good to check your profit and loss graphs using this before you start putting your money in any options trade. Okay, so I'm gonna give you a simple example with a long call and a long put, but if you want to check out the other ones, you feel free to go and dig into all of them, because I'm not gonna cover all of them in this video. It's gonna be really long, so I'm just gonna cover one call side of it and the other one the put side of it, right? So those two I'm gonna cover, and I'll take one example. Any stock works. I'm just gonna take Nvidia as an example, but yeah, the same thing, same steps works with any stock. Okay, so on this one you type the symbol that you're trading. So Nvidia, you get the current price. Once you click that, it shows the current price. Now here, buy or write, right? So buy is for the buy side, write is for the put side. Okay, so you buy. I'm showing you this is a long call, right? So that's a bullish strategy. You are buying a call. Okay, so buy and then you select the option, right? So this is an important chart that you see here, right? Make sure that you select the right expiry date. So let's say we are going for, right now when I'm recording, the 29th is about 25 days out. So I'm just gonna select that, and then whatever you see on this side, right, they are the call side, and this right hand side what you see are the put side. Okay, so and this is in the middle is the strike price. So whatever you see below that, they are out of the money because they are more than the spot price. Okay, and whatever you see here on the top, they are in the money because they are less than the current market price. Okay, so keeping all that in mind, you can, let's say you're trying to buy a call anticipating that Nvidia is gonna go up, right? So let's say you're thinking that Nvidia will go up, so you are thinking of buying a 200 call, right? So you buy a 200 call, so you buy this one, right? So that's the middle one that you select here. So that's the contract money that you are gonna pay, right? This is the money that you will be paying, which is the $223 is the amount that you will be paying, right? It shows here. Okay, you have to just select this and then you do calculate. Okay, so once you click calculate, it's gonna show you this nice chart, right? So let me move myself a little bit here. Okay, so this is gonna show you this chart, right? And on this one, what you see here is whatever is in the green, right? That's your profit zone. Okay, and the other half that you see on the red, that's gonna be your the loss, right? Where you can actually lose money, right? So if you're trading here, if you hover over here, right, it's also gonna show you the dollar amount and the percentage amount. Okay, so today, let's say the price is at 180, right? And let's say you buy it today, and today itself the price kind of shoots up to say $190, right? Within, let's say within 30 minutes of range, Nvidia shoots from 180 to 190, right? So how much money you're gonna make? So you can check here, right? So you are basically gonna be up 130% on that trade. You're gonna make $291, right? So you had put in $200, you're gonna make almost $300, right? That's the scenario that you can check here, right? Now opposite side, let's say the Nvidia goes down, right? It goes down to, let's say, 177. Okay, so how much money you're gonna lose, right? So you're gonna lose $45 provided you close the contract. Okay, uh, and this, as you can see here, right, as your the time increases, right, because we bought a 29th August expiry. So as the time increases, right, if the 190 was hit on day one of your buying a contract, you made let me uh, pick this one, right? So yeah, you made 291, right? If it hits tomorrow, you're gonna make 282. See, it's gonna keep reducing here, right? And why it happens? Because you are losing money because of the theta, right? Because theta is in play here. If Nvidia hits your target range of 190 in after a week, you're not gonna make that much money that you are making on day one, and that is all because of that extrinsic value that the contract had, right? And that's gonna be eaten up by the theta, right? That's why you see it going down as the day progresses, like as you are getting closer to the expiry, you are gonna keep losing that money because of theta. Okay, so that was the call side of it, right? And your max loss is in a buying a call, right? As you know, the max loss is always capped. Whatever you money you paid for the contract, that's the max money that you can lose, right? So that's why after a point, this is gonna be the max, right? So $223 you had paid, and that's the max you can lose, right? So your loss is capped, but you have a unlimited upside potential, right? It can go to, there is no upside when you buy a call. It can go to infinity here, right? That's why it shows, right, it keep going up, but on the downside your loss is capped. So this is a nice way that you can actually play around. You can change ranges here too if you want to see more ranges in based on your charting and support and resistance. You can set your own range, and it's gonna put the chart based on your range, right? So a good way to for you to see how your trades would play out, provided where the market goes and where the stock price moves in a week's or till your expiry, right? So that's the call side of it. Now moving on to the put side, right? It's a very similar one. You basically we selected long call, right, first. So instead of that, you select long put, and when you buy a long put, you know it's a bearish strategy. So your chart is gonna be kind of flipped now. As the price goes down, you make money, but as the price goes up, you lose money, right? So that's the put. So again, I'm gonna just select Nvidia in this case. You get the price same way. Now here, instead of buy, you say right, because buy was the buy side of the put, and right is the right side. That's the put option. Okay, you select this one, and this is gonna be same chart. You select the expiry date. Now let's say you anticipate why you are buying a call, buying a put is because you are anticipating that it will go down, right? That's where you buy a put option. So let's say you expect that Nvidia will go down to 150. Okay, so you select this one on the put side of it, right? So you on the put side, select this one. So this is a put, and actually this one would be a buy. That's because you are buying a put, right? The right is actually when you write, so basically that's a sell side of it. So okay, yeah, I think I said earlier that's right, but it has to be the buy because you're buying a put. Okay, other things are similar. You calculate, and now if you see, right, the this is a kind of inverted chart of the call side. On the call side, all these were on the bottom side. Now all this profit is going to increase as the stock goes down. If you see the stock as it goes down, you start making money, right? So if you buy Nvidia here, and if it suddenly goes down to, let's say, 160, you make money, right? If it goes down to 160 on day one, you make $347, right? And you just had put in, I think, $111, right? So $111 was the investment, but if it Nvidia goes down to 160 on day one, within 30 minutes of you buying this contract, you're gonna make $347, right? And that same theta applies here too. If your target price is hit after a week, your profit is gonna be eaten away by theta, right? So theta is in a play. Again, I have a video about these option Greeks, which I'm gonna put down in the description. It's very important in when you are in options trading to understand the Greeks very well. But theta is the one that personally, because I am mostly on the sell side of the options trade, most of my income is from selling option. Theta is very important to me. That's why I'm keep emphasizing on the theta, right? Because theta is a big part of the option seller. So yeah, so as the time gets closer to the expiry, right, your profit is gonna be lesser and lesser as you get closer to the expiry. Again, on the maximum loss, your maximum loss is always capped when you buy a contract. So because you paid $111, you cannot lose more than that. So that's your max loss in this case. Your max profit is capped, unlike the buying a call, because a stock can go down to zero, right? But on the upside, stock has can go to any number of like it can go to infinity, right? So that's why when you buy a call, your upside is uncapped, but when you buy a put, your upside is capped, right? Because uh, it would definitely not go to zero, right? But theoretically it can, and that's gonna be your max profit on buying a put. Okay, so this is a good way to visualize. uh, just if you wanna see how your stock, how your profit is gonna move, and if you wanna close an option early, right? It's not like you have to go till the expiry. You can always close any options before the expiry, right? I have some videos on how you can close options trades before expiration. You can watch that to see how you can do that. I mostly use Robinhood platform, but concepts are same. You can use the same concept to close the trades early. That was it, guys, for this video. I have one more site which maybe I'll make a separate video that's very similar to this one, but this one is pretty straightforward, and you can use most of the features for free, which is a good thing. You can come here, check your trades, how it's playing out, and then put your money on the actual trade, right? Visualize everything and then put your money. So it's a good site to do it, kind of a homework before putting your money in the actual trade, right? I'll make a separate one for the other site that I use. I use both of them. Both of them provide a similar thing. The other one is kind of a paid, but this one is pretty basic, but it works well. So with that, guys, I am closing this video. If you have any questions related to this one or in general options trading, then do put your questions down in the comment below. I read all of them and I will reply to that. Happy investing, guys. I'll talk to you in my next video. Till then, bye bye.